This is the Loan Creator YouTube. We hope this video helps.
You start by funding and verifying your brokerage account so orders can fill. This matters because delays cost opportunity. Once done, define capital, risk per trade, for example 1%, and the instruments you will trade. Pick 1-3 to master. Then place small, intentional initial orders. Use limit orders to control entry price and predefine stop loss to cap downside. Make sure to paper trade the exact sequence first, so you learn order placement and execution without real losses. You next analyze setups across timeframes to align trend and entry precision. Daily confirms direction, 1 hour refines swing, 5-minute times execution. Then execute with order types that match your plan. Limit for controlled entries, OCO for paired stop and target. Manage trade actively, trail stops, or scale out partial positions as momentum confirms. This reduces risk and locks gains. Keep a trade log explaining why you entered and how you adjusted, because you finish trades strictly by your exit rules to avoid emotional decisions. Take the target, accept the stop, or close at a preset time. After every trade, record entry, exit, size, and R multiple so you can quantify edges and iterate. If things go wrong, orders not filled, or unexpected slippage, first verify your internet and brokerage status, then review order type and market liquidity. Adjust size or use different order types. Finally, adapt the plan. Trading is iterative and risk management is paramount.
Thanks for watching. Consider subscribing if we helped you.